G'day folks, Jim here from FX Charts, Tuesday the 4th of Feb. Thanks for tuning in. It was pretty much a market rout today, depending on what you were looking at. The yen came strongly back into favour following the weaker Chinese data and its safe haven status. Cable also had a pretty poor day that fell out of bed. And the dollar's generally a bit weaker all around. We're going to have a look at the charts. The euro is a little bit higher today. It made a little bit of progress. The EU manufacturing PMIs were mixed, although they were reasonably firm, slightly better than expected. But the euro was not able to make too much ground, really ahead of the ECB meeting, and the thought process is that are wondering whether the ECB might actually cut rates on Thursday. Don't think they will, although Deutsche Bank and the Royal Bank of Scotland have both called for a rate cut. So we're back above. We've held this 134.80. We're back at towards the day's highs. We haven't been able to get above 135.35 today. And the 1 hour charts are a little bit neutral, but the 4 hours look as though they might be winding up for a little bit more of a test of the top side. And that being the case, we might see a bit of a test up here to this sort of 135.70 area. And then beyond there, we've got the 200-hour moving average up here at sort of 136 or 10. Now, I don't think we're going up that high, but we could feasibly see 135 and 3/4, 135.85, something like that. I suspect eventually that's going to be a sell opportunity again. I think the daily charts are still negative, as we'll have a look, and I think eventually we'll probably come up here. Once we've had a look at this sort of 135 and 3/4, possibly the 100-day moving average at 136, then I think we probably head back lower, and eventually I think we're going to take out this 134.5 level, and I'm hoping for a move back down to the 200-day moving average. We haven't actually been down there for quite a while. The last time we touched the 200-day moving average was back in September, so it'll be quite important if we do get there, and I would doubt we'd go below there at the first attempt, and it's a long way away from there yet. So today I think so 134.85 to 135.70 probably covers it. The euro is also being pushed around, of course, a lot by the crosses. The yen, obviously, euro yen headed lower, sterling yen headed a lot lower. Because dollar yen, although it held this 200, the 102 level in Asia for much of yesterday, it kind of fell out of bed as soon as Europe got in. It picked up a little bit towards sort of 102 again, and then it came off once the US ISM data was released, and hasn't really looked back. It's been down to 103/4, and it's sitting around 100 at the moment. Now that's the 100-day moving average. Let me just get rid of that a second. That's the 100-day moving average where we are at the moment. A break of that goes down to the 200-day moving average, which is just above 100.5. So now the daily indicators are pointing lower. The 4 hourlies are also pretty negative. We're going to come into some support here, being the 50% pivot of the whole move up from wherever that was. I can't remember now. Whole move up from sort of 95.80. So that's going to be important for us. A break below there, then can head back towards this sort of 100 level and possibly lower. I don't think we're going to see that today. Keep an eye on the Nikkei though. That's after the way the stock markets have performed today, the Nikkei's had another tough session, and following its fall yesterday, that could push dollar yen lower once again. But in the meantime, this 100-day moving average at 101 should act as some kind of support, I think, in the short term. Cable, well, that had a bit of a rout of its own, and having broken this trend line that we've been watching recently, it hasn't really looked back. It got quickly down to 163.30. Had a bit of a relief rally after the US ISM, but the UK manufacturing data was poor. The dollar regained its ground against cable though, and it's finishing on its lows down around this 163 figure 10 support that we spoke about yesterday. Now, if we go, if we are going to head lower, 162.70 should provide some support. This white line is the top end of the long-term channel that cable traded in for months and months. I'll show you that in a minute. But this, or 162.5, is 50% of the move up, and then we've got 161.70 down here. If we go out and have a look at the weeklies, the top white line is the channel top that I'm looking at. So that might provide some kind of support, but it does look to me as though cable is giving up. This is a weekly chart, and it does look as though it's rolling over. The dailies are also negative, so I think we're going to come down here and probably test this level, so we're down around 162.5, and eventually I wouldn't be surprised to see a break towards the downside. Dollar Swiss, that's choppy, a bit messy. I've been bullish on dollar Swiss, and it's not really working out at the moment. I haven't lost faith yet, but I must say, if we head below 90, I think there'll be some stops triggering us down to sort of 89 and 85, 89, 75, somewhere around there. That may be a good area to buy the dollar, but right now there's probably better things to look at. The dailies, they're pretty flat, and the 4-hour charts are suggesting that we could see a bit of a test of the downside. If I'm wrong on that, and we do head higher once again, if this 200-hour moving average holds, then we might see a move back up to 90 or 40. But I don't think we're going much above there today, and I certainly don't think we're heading back up to sort of 90, 80 where we saw it in yesterday's session. The Aussie, well, that's on hold, waiting for the RBA later today. No change expected there. Now it looked to me as though it made a false break on the top side. It got up to 88.32 where it failed badly again. That was after the ISM data, where weaker dollar. It's come back, and it's now sitting right in the middle of its range. Probably we just have another session of 87, 88 again today. As I say, the RBA are not likely to do anything. They could be a little bit dovish on their outlook, which might push it down towards 87. But even so, I think 86 3/4 down there is going to provide some reasonable support, and I don't really think we're going below that today. But this false break is a bit of a worry, and I think the downside is possibly the way to go. If we get above 88.30 at any time soon, which doesn't look like today, then we're probably heading up towards this 88.75, 85 area. But I think that's for another day. Kiwi, not an awful lot to say. It's looking heavy right now. Actually, it got down to 80.60 yesterday, up to 81.38, which is the 100-day moving average, as I'll show you in a second. But it's lost all those gains, and it's back down here towards the session of those around 80.80. It doesn't look particularly good. These are 1-hour charts. The 1-hour charts are looking a little bit soft. The 4-hourlies. The 4-hourlies are trying to recover, so I do think we'd probably like to hold this 80.60 level today, unless the RBA are very dovish, in which case the Kiwi might follow the Aussie a bit lower. But on the top side, it looks as though this sort of 81, 20, 30 area might cover it for the day. And the daily charts are winding up for further potential losses to the downside. And the 61.8% support of this whole move up comes in at around 80.30. So that's going to be the next downside target. So that's about it for today. The RBA will be the main point of focus. Don't forget it's Chinese New Year, so liquidity is going to be thin still in Asia. And then later on, we haven't got an awful lot out today, actually. There's the European EU PPI and US factory orders. If they're soft again, the US dollar could come under further pressure. But overall, keep an eye on the equities. They look very heavy to me. The S&P, if it can get through 1730, close at 1735, where it's currently trading rather than its lows. If it goes through 1730, I can see a test of 1710, and then the 1690 to 1700 area. Don't think we're going back over 1770 now. That should keep the pressure on the downside for dollar yen, and I think the Nikkei could have another tough day as well. So that's about it for today, though. Have a very good one. Keep your stop losses tight, because it's going to be moving around a bit, and we'll talk to you tomorrow. Cheers.